Right, guys, so good morning. It is Thursday, the 8th of March, 2018, and we're going to take a look today at the wide range outside bar, which is a particular technique that you can use. And I'm going to try and highlight exactly how I use it and other situations that you might find it useful. So I'm just going to draw a couple of boxes here, and hopefully this will work out. So what we're looking for here is a situation where you have price action doing its thing, and it might be forming into some sort of push trade or some sort of expansion trade, or getting towards the end of a swing, or whatever it might be that you've identified. You're looking for particular behavior in price action. And one particular thing that is very, very interesting is when you get a bar that is both lower and higher than the previous however many bars you want to go back, but it also works out to be one of the widest bars that you've seen for however long you want to go back for. And these often work out to be very, very interesting signals to watch out for. And I'm going to show a couple of examples of how I use it. So I'll just try and demonstrate it for you using this particular block. And it might be something along this lines. May have to actually do it in line form. That might be easier. So you kind of, let's say you're trending down and price is heading, lower lows, higher lows, etc. And you've maybe identified a particular area. So for example, you had this wide range, let's say a couple of days ago or something, this larger zoomed candle, and this was the base of that particular move here. It topped out up there. And since then you've been retracing. What you might have identified is that you're looking for price to come back to test the base of this move, creates a mountain formation, and from there you want to look for an opportunity to get long. And that's where you might find this particular example of a wide range outside bar. So your price heads lower, excuse me, price heads lower, but it also closes above the previous candle. So what I'm looking for is a bit of behavior. I'm looking for this particular candle to be a lot lower than all the previous candles, say for example the last 10 candles or something like that. So it creates some clear space below and it closes above in order to create this wide range bar. So it kind of engulfs it as well. And that's really, really interesting to spot. So I'm going to try and find a couple of examples where we've seen that in real time. It might not necessarily be on the DAX, but you can use this technique wherever you want. So for example, we've got the Euro Pound chart in front of us here, and I've got an arrow pointed to where there was an interesting wide range outside bar here. And I'm just going to turn something off on the screen there. There we go. Okay, so I've marked out a couple of points, and you'll notice that pretty clearly you've got yourself a bearish trend here. You can see that you've got a point where this particular previous minor swing high was tested, but it continued to move down into a final trend. And there was a bit of a signal, a bit of a sign that there was something happening with this particular wick here. But what I found really, really interesting with this particular market was that once we bust through this particular support level here, price exhibited this kind of, here we go, this zoom here where it's taken out this previous consolidation zone. And once you get something like that, it starts to suggest that something's happening, something's going on. So what you can do is you can say to yourself, right, well, I'll mark out that zone because that was a point where this particular move initially ignited. And I'll look for a test of that area again once price comes back to it, if it does. And sure enough, it starts to work its way to test the highs of this wick candle. It gets rejected from there. It then comes down to create this sort of bookend almost formation where you've got that almost retracing the majority of the original move. Doesn't quite get into that zone that you marked out, but then it takes a second bite at it and baits the zone right here. So you've got to ask yourself a question, well, what does this move suggest? Well, this move's kind of suggesting that these guys just got taken out. So anybody that would have bought here probably would have had their stop losses under that little zone. So maybe they were buying in here, put the stop loss under there. There's a lot of people, and it's pretty well telegraphed that that's where stop losses are hidden. So that is just a clear sweep of the stop losses. It's just a wash. And that's an interesting spot to find a wash because it's inside the baited zone that you marked out from this move back here. And if you go and have a look at the price action within that particular move there, once you've highlighted it, let's just go in and check it out. You'll notice that you've got a wide range outside bar. So it's pierced below all of the previous candles. It's a lot wider than all of the previous candles. And it's quite aggressive and it's fairly bullish. It engulfed sort of, I don't know how many candles that is, 8? No, a couple of hours worth of data. This is a 15-minute chart. So what you're really looking for there is ideally a kind of a bait of that candle. And I guess that would have been the area that you could have done it. Just kind of tagged in, didn't really get that far. But it gives you an opportunity to put your stop loss underneath there, get in for a long, look for 3 to 1, and off you go. It's a nice simple trade. In actual case, this probably would have got you a lot more than 3 to 1. Hindsight's a wonderful thing, but it could have ended up getting you, 5, maybe even 6 or 7 to 1. But 3, I'll be happy with. So that's an example. But another thing that you can kind of highlight here is that if you just draw this basic overhead push line, because you'd have been probably fading this move for some time, excuse me, and draw even a median line through the middle of it. I'd guess you maybe start it from further back here. And it kind of tags roughly. It's not particularly pretty as a median line. You've been tagged a few times here. But it looks like a multi-pivot line because it's been reacting from both sides. You got the reactions from underneath here, another one here, or they dug in a little deeper. It's washed it a little bit there, washed it again here, zoomed it there, and then it's tagged it from the underside, from the other side here. So you'll notice that if you get that particular kind of wide range outside bar on the other side of this particular kind of line, it strengthens its case as a multi-pivot line. So it's just another example of interesting price action. You don't need indicators for this, although I have an indicator for the outside bar, but you don't really need any other indicators to spot this stuff. Just read the price action. So that's the euro pound example on the euro pound. Okay. Let's go and have a look and see if we can find another one. The Dow. Here's an example on the Dow. Again, we don't need any indicators on this. You can just simply mark it out. We're looking at a 15-minute chart on the Dow. We're back at the 22nd of February. And you've got this bottom of the move here, although at the time you didn't know it was going to be a bottom of the move. You could potentially have marked out that zone there and thought to yourself, okay, well, maybe this is going to form a valley. It kind of did, got a bit of a reaction here, but we've then swapped that. And that's an area now that would be used to build price, and it did. It formed a higher low here and a higher low there, and it just continued its move. A little gap there, which closed, and another sort of mini low here. So price action is forming a pretty clear bullish trend. It doesn't take a genius to spot that. And then what you start looking for is you probably be starting to think, well, how long is this going to move on for? How long can I continually buy this market for? And for me, what I would be looking for is either a clear sign of reversal or a clear sign of continuation. And the clear signs of continuation for me are things like that. Gap. You could even argue that right there. And that's sort of wide. It's not exactly a wide range bar, but it's wider than the others, and it did go both lower and higher, and it got baited. In fact, actually, that is an example right there. Maybe not the best one because it's not lower than enough candles for me really to kind of suggest, but it's an example at least. But the one that I'd really be finding interesting is that one right there, because it kind of fits the criteria for me. It's lower than the last 10 candles or more. It's higher than most of the candles as well, and it's wider than the previous bars. So what I'd be looking for with that particular move is for price to retrace somewhere towards ideally the base of the move, and if you can get that, that'd be great. And it did. Baited into that zone a couple of times, held. So it gives you an opportunity to get yourself in with a stop loss perhaps under some structure over here, maybe get in there on a bait on the move and look for 3 to 1. And again, this particular move would have been quite comfortable. You'd have probably got out here because you'd maybe start to think there was some exhaustion there. But, in actual fact, it would have got itself, again, sort of near 6, 7 to 1. And of course, that would have been quite pleasing to anybody who was already long. So that's another example of a wide range outside bar during a pretty strong trend. And whether or not people would have the bravery to get long once the price has already kind of expanded, best part of 800 points, 700 points? Difficult to say. But it's a saying that's been bandied around for a long time. The market will remain irrational for longer than we can remain solvent. And, it sometimes does continue to keep going on and on and on and on. Okay, let me just have a look. I've got a question here. Hi, Chris. I see you use the order flow chart. If I may ask for advice where I could get my hands on it. Okay, so order flow is not included on this particular charting package. I'm not using it today, but the company or the provider that I used to use was ATAS, Advanced Time and Sales. ATAS. They get a Eurex feed for DAX. It is premium software. You have to pay for it, and it's a couple hundred for a subscription. So you might want to check that out. Okay, so just moving back to this. So that was the first one that would be interesting for the Dow. So I'm just going to clear up some of these arrows here. And if we get towards the other side now, because you can start reading price action at this point, and maybe you're anticipating that we're coming towards the end of a trend. Maybe you're not. Maybe you're looking for reasons to continue and continue to trade this higher. But something very crude that you might be doing is to just draw a very, very basic line and just think, okay, well, once we start breaking this, it starts to suggest there's a change in behavior. And once there's a change in behavior, you might want to look for opportunities to fade the market. So when you got this particular price action, I find it interesting to just see what's going on, see who's in control and what's happened. So you've got this zoom bar here, and it gets tested there. It's actually the wide range outside bar example that we gave. We've got another mini zoom here and kind of a test there. And this is what we're looking for, is that activity where you have a zoom and then a test. Zoom, test. So all the market does is zoom and test. Certainly on these kinds of indices, look for the wide range bar, look for it to retrace. Don't buy at the top, buy once it's retraced. Same the other way around if it sells. If it zooms down, don't sell at the bottom, wait for it to retrace and sell there. But the market is just pretty much all about zoom and retesting. So there's another example. And here is another one. So another zoom. So what we're kind of looking to do is to see whether or not we're still making higher highs. Once we've made these shoot ups and then we retrace, we're looking for the next zoom, if you like, to take out the previous high. If it doesn't do that, then the minor swings are no longer in place and the trend is potentially about to reverse. And if that doesn't make sense, I'll just show you the examples of it. So again, I'll clear up these lines. So you can clearly see that that's a low, there's a high, there's a low, that got taken out, that confirms this is a low. And then let's just assume that that's your next high. There's the low. We take out that previous high, so that confirms this is a low. And it just goes in that cycle. You've got to take out a previous high to confirm the previous low. And this would have been the high here. Here's a low, right? Let's say there. So the job of this guy here is to take out this guy here to confirm that as a low. If it doesn't do that, then it's a fail. And if it's a fail and it breaks some other lines that you might have, like for example, this line here, then it might start to suggest change of behavior, and you might look for reasons to maybe enter into a pretty aggressive short because, it feels like you're going against the trend, which kind of are. So we've got a potential fail here. So then you start to look at price action for an increase in volatility, which suggests that people are taking their orders off or taking some profits or whatever it might be. And you'll start to see that volatility does pick up around about this kind of area. And you'll see you've got a few things. You've got another zoom just in there. Starts to take out some of these guys here. Get a bit of a test in there, and it continues to head lower. And that's the point where you start thinking, okay, well, we're actually starting to see a complete change in behavior here. You're creating a low there. High here, that will get confirmed once this guy gets taken out, and there it is. So you look for price action clues to see whether or not there's anything interesting that's going on here. And the bit that interested me the most was, I don't know if you can quite see it. So I'll just zoom in a little bit more. Would be this guy just there. Can't quite get him on it, but this one here. It's lower than quite a lot of the candles before it. It's wider than a lot of the candles before it, and it's higher than the candles before it. And that would start to kind of suggest that something's going on. If you'd have just simply taken a short straight off of that, you might well have been stopped out by this guy here. But if you just watch it for price to then start forming this particular move, then you can start thinking to yourself, okay, well, here is probably where I'd like to have a go at that, or even a bit lower, even, you know, down here, once you've kind of got another zoom confirming another low. But it just starts to suggest the reasons why. So wide range outside bar, in this particular case, after a failed attempt to take out another previous high. So that's another point where you can look at this particular technique. So it's exhaustion at the top or bottom of a trend. And again, you don't need indicators for this. You can just read the price action to see who's in control, see whether the swings are still in place, see whether the previous highs are taken out or whether there's a fail. Watch for these kind of wide range bars, these zooms, and to see if the base of them gets tested. And that's the point where you can then start to trade in line with the momentum. So there are two examples on that particular market, and this one was a pretty aggressive sell-off, which would have got plenty of points. And let's see what else we've got. So we've got S&P 500 here, and it's, again, similar kind of story, really. You've got a pretty messy-looking chart around this kind of area here. Pretty difficult to trade in. But you've got this action here that suggests something's happening. It starts to form a bit of a valley, test the bottom of that valley, and then begins to form a new trend. As you've got your low here. That low would have been confirmed once this high was taken out there. Then you got another low here, and so on and so on. It just continues in that pattern. So that would have been an area to mark out as a base to look for a retracement back there. It didn't happen, so you look for another idea. And as you get towards the top of a trend, you can start doing exactly what you did on the Dow, which is kind of start drawing these lines and thinking, okay, well, are we starting to exhaust here? Are we starting to show signs of reversal? And look for reasons to maybe either take your profit or reverse. And the two things that were interesting to me on the 15-minute chart for the S&P 500 were the guys that I've just marked out here. One, I think, is just there. This lower candle here rather than the spike one here. It's higher and lower, wider. And this guy over here. At the time, it was higher and it was lower. Again, look for where the candle can often close, and you'll see that it worked out. Now, this was a bearish wide range outside bar, so it was this one. And then you look for price action to confirm what might be happening. So this example, that would be your test on that side. So you would just simply mark out that zone as a potential area to look to sell. Once it baits into that zone again, gives you an opportunity. And the same idea again on here. You might have overshot this one, but you look for opportunities to get a bait inside that zone again if it gets into a retest. You may not have had that option. That may have run away from you and may have been too late, but so be it. So there are ways that you can see this particular price action, and you can see it by using your own coding if you want to do that. You can just build the indicator yourself, and it's a bit of an algorithm that you would just write up. You can use the one from the website if you want to use that, and that's already on there as well. It's a MetaTrader 4 indicator. You can use it if you wish. Premium guys, you already have access to this, so it's already in the forum. Just go and download that if you want it, and it's free for you. And you can just put it on the chart, and it will actually just highlight those zones. It will work on any time frame. Some of the signals might well be better than others, but use it in conjunction with your own price action as well. It's like anything. Don't never just follow blindly a signal that you get. Always use it in line with your own analysis. So hopefully that gives you an idea of how it's used. That's the wide range outside bar, WROB. And you can have a look on the website if you want more information about that. There's an article I've written about it, I think, as well. So thanks for joining. I'm going to leave it there for today. I'll upload this video and I'll post it in the rooms. If you need any more information, send me a message on Telegram or send me an email. The details will be in the link in the description of the video. Hope you have a cracking trading day, and we will catch up with you guys another time. Take care for now.